Alrighty, good morning everybody. Welcome to October 1st. Let me give you or you guys give me a mic check. I want to make sure everything sounds good, sounds clear. I definitely have my recorder off of mute today, so we will have a good video. Sorry about that. Rookie mistake yesterday. Gus, are you in here? Gus is in here yet. He had posted in a picture last night. I want to make sure that I get with him. Don't see him yet, but we'll get him in here in a minute. For the rest of the week, I want us to be able to continue on the great work that we started yesterday. First and foremost, let me open up my trading plan. I do have a question for everybody. And, look, be honest, because I've done this for 150 years, so I already know the answer. Do you guys have a written trading plan that you follow at all times? And sometimes you don't follow it, I understand. You're going to make some mistakes, but all right, no plan. It goes back to the old fail to plan. If you don't have one, it's not that you can't win. It's just, what happens is you allow yourself to kind of do things that are, gutsy feely and I think-ish, and there's a lot of things that you can do that create issues. And when trading, you have to be able to have something that you can fall back on when things aren't going well. And if you don't have a trading plan, you're going to end up doing things that cause you trouble. And yeah, Andy, I understand. Those are the things that I'm trying to find a little document that I put in. Can't get to it. Anyway, no big deal. We are going to talk about today some of the basics, and I want to make sure that we cover the basics first. We cover the, somebody had asked me for the Mark's trading plan, and I don't even have it. I guess I do have it somewhere, but I pulled one up, and the funny thing is this is the one from 2021, I think, if I'm not mistaken, or 22. Nothing has changed. And the rules that we teach you guys are the exact same. We talked yesterday about odds favorable momentum on your charts. And every trade that you do has to have some form of odds favorable momentum. And what we're talking about, quite simply, is, we're talking about, let me not draw my NinjaTrader, see if I can keep my NinjaTrader alive. We're talking about this look right here. And Gus, are you in yet? Give me a Y or an N. I guess you can't give me an N if you're not in yet, but he had asked about this a little bit earlier. Okay, Zorro. Okay, good. Did you change your name, Gus? Bear with me. And the reason I say that, there's yesterday Gus posted in this picture. And this is such a great picture, and I made some notes for this picture. And one of the best things that Nexgen software does, other than having awesome rules, kick-ass software, everything else that we do that's great, one of the best things that we do is the analysis of what you guys are doing. Literally, it's one of the most important things on the planet. Because if you do a trade, like Gus did this trade here, he went short. And I understand when you look at your small chart, you may be thinking sell resistance because there's a couple triggers down. And what I like to do is I like to put a name on every trade, if that makes sense. Because if you put a name on every trade, here, let me go back to this picture. I'm just going to save it and we'll blow it up bigger. If you name it, then you have to go back to your trading plan and you have to own it. And people without a trading plan do trades that they're not supposed to do, and they do them all the time, and then they go back and go, oh, I should have done that. This is a perfect example. Look, a new user is going to make mistakes. We want you to make mistakes. That's the whole point. So when you're looking to go short, what we want to see is the large triggers going down in red, and we want to see the small triggers going down in red. Can you guys see this picture okay? Just want to make sure. I blew it up really big, so it's like horrifically exaggerated. But this is up. It's small triggers, green above the large triggers that are up in green. And this is up, 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 up. And what you're looking for when you have up triggers is to buy support and get out of resistance. And what happens is if you sell short against triggers that are up, and this is where, look, this trigger right here, this sideways line, represents the value of this trigger over here, the large trigger. So it's superimposed on the small chart. And whenever you see up green triggers, this is not the time to be selling. What we want to see, just for short version, is these triggers below this trigger and this trigger going down, and then you can go short. There's other types of trades that we do, but primarily we're talking about the trend trade first. Because if you don't have the trigger line read correct, if you don't have the trend trade correct first, you're going to end up causing yourself a lot of heartache. So again, just to reiterate, there's 3 simple rules that you're going to need to do a trend trade. You're going to need to do long trades when the small triggers are going up and above the green triggers, and then when both triggers are going down, we look to sell pullbacks to resistance. And this is basically the pattern back and forth, and you can see it over and over and over. It doesn't matter what chart you use, whether it's the S&P, it doesn't matter what time frame you use, it doesn't matter if it's the NASDAQ, gold, Bitcoin, or anything else. You could literally give me any market, just say it out loud, and I will be able to go in and build a chart and show you exactly where the best trades are for trend trades. And, one of the things that, once you resign yourself to the fact that you have to have this look, then most of the time you're not even looking for a trade. Things like the S&P or crude oil, you may get 6, 7 trend trades a day if you're lucky, that have high probability. And again, this is all straight out of the user guide, so hopefully it's pretty self-explanatory, but, between where the small triggers get above the large triggers going up And where these small triggers are still outside of the large triggers, this is your highest momentum section. And 7 or 8 times out of 10, when you get a pullback into your large triggers, the market is going to go up. And again, when we put this PDF together for you guys, everybody has a copy of this, right? I gave it to everybody yesterday. I reposted it at the top of today. So if you do need it or you don't have it, just scroll back to the beginning of the day today, and you'll have the everything needed to win, and then my trading plan. So you can download those two right there. Now, again, this PDF goes through, the essentials basically of trend trades. And, it also gives you the video, and it gives you time in the video where we talk about these things. So if you wanted to just not look at the picture and you wanted to go back and look at the video, this will give you the link to the YouTube video that will go back and play that section for you going forward without you having to go in and search for it, which I think is a pretty cool little thing. And I'm not sure if everybody understands these little links will take you to this spot in the video. Is it pretty clear, and again, even without the small triggers, we want price action below the large triggers going down in order to think about doing any type of trend trade short, and we want price action above the large triggers going up to take long trades. Alright, and again, Zorro, this is, and the only reason I kind of belabored this point is, when people do trades and they're wrong, it's okay, to have a wrong trade. It's not okay not to learn from it. So, again, just to revisit this one more time, just to really make sure, starting with the chart on the left, your bigger chart, do you see how these triggers are going up strong? That's the number one reason that makes this not a trend trade. This is there's some red lines and some red triggers, so I'm going to sell it, but it doesn't really meet the rules or the criteria for a trend trade. The other thing, when we talk about trend trade, so once we have the triggers correct for a trend trade, then there's a couple other things that we talk about. As far as rules for a trend trade, there's 3 rules. And, the first rule is kind of a combination, if you will, of a couple different rules put together. The first one is, did you start the high or low from the top or bottom at Fibonacci support resistance? There's a video in our user guide, which, by the way, my son Chris has redone the user guide. I really love what he did. We're going to probably update it the next day or two. It's the same info, but it's a lot cleaner and easier to digest. You guys will see what I'm talking about in a day or so. But there's a video in the first 30 days and beyond. So if you're in your first 30 days, number one, please watch this video. This is probably one of the best videos I've done ever. It's from years ago. I don't even know when it's from. I might have to look it up. But it's not even on Ninja Trader 8. It's over a couple years old. And anyway, short version is, it discusses whether or not you've got a good top or a good bottom. And what we have found is that when you hit a termination spot and you have divergence from that spot, the subsequent trend trades usually are very, very high probability. That's the short version. So if you are new, watch this first 30-day video, and it will explain to you what this rule number one technically is about a good top or bottom. I've got 150 videos on this. So, there's a million ways to say the same thing, and we've said it a million ways. One of the other resources resources, again, when you get a good top or bottom and you have these strong trigger lines, which I won't belabor anymore, on your big chart, then we want to look for, do we have room to the target? Is there enough room between where I want to get in and where my profit target is in order to make 100, 200, 300 bucks? And if there's not, then you probably don't want to take a trade, and if there is, you probably do. And then ultimately, entry area at the triggers and the area. And I want to go back to the PDF that we were looking at. Again, hopefully everybody cool with price bars below, down, wides, large triggers. I mean, this is rule number 1, period. As rule number 1, you got to have it. And the short version is, if they're strong up, you're buying pullbacks. And if they're strong down, you're selling pullbacks. I won't belabor this point too much. Ultimately, look, once you actually get a trade and, you're in a position, whether it's a short trade because all the triggers are going down and you sold resistance, or you put in a bottom at Fibonacci and all the trigger lines roll up and you're buying pullbacks to go along with all the triggers going up. Either way, I want to get to trading stuff. And again, I'm not going to go through termination conditions. Again, a lot of people don't know about all the resources we have available to you guys. Let me highlight them just real quick. We have hundreds of educational videos from Mark's chat room. The nice thing about Mark's chat room is the first hour is dedicated to trend trades. Absolutely. I mean, that is a trend trade, Steve. Everybody who does trend trades does that. I mean, that's what you're looking for, is a confluence of triggers and lines together. Support or resistance and the triggers. And again, we'll go through this a little bit more, but let me show you your resources you have available to you. So if you're brand new, look, every one of these videos starts off about the same. There's an hour-long education on trend trades and trend trades and trend trades only. It's pretty much the same damn thing every day. I mean, literally, it's the same thing every day. And you don't have to watch 100 of them to figure it out. But you don't have to sit in this class and wait for somebody to teach you a trend trade because it's already been done. Just so you guys know. There's a second thing that I might want to mention. It's not our job to make sure you're educated. We're not mind readers. If you have questions, you have to ask them. I used to be able to read minds. I think when I was like 42, I lost that ability. Now I'm 55, so I really can't read minds anymore. And since I'm 55, I don't really give a rat's ass. A lot of things have changed in the last 15 years. But we're here to help. But we're not mind readers. Don't go complain to your salesperson that you're not getting what you need. This is the forum for you to say, hey, I need something. I don't even know what the hell it is. I just need something. Somebody give me something. So don't be a wuss. Don't be a crybaby. Don't sit here silently and go, I sure wish I could get this or that, and then you don't get it. I want you guys to be selfish. Do you guys have a little bit of selfishness in you? If you don't, it's going to be tough to be a day trader. It's all about you, your money, your trade, your plan, your education, your questions, your time, your money. And if you don't prioritize yourself and you just sit there, then, again, look, I can't read minds anymore. So if you need something, say something. Now, here's another cool resource that we've put together for you. I'm not sure if you guys have seen this or not, but there's a 60-second video series. Check this out. And in this 60-second video series, we have trim trade shorts defined, trim trade longs defined, defining the market trend, which is your trigger lines, Fibonacci turning points, which is also called terminations, long trade entry area. Where the hell do I get in if I'm going to do a trim trade? Short trade entry area. Where the hell do I get in if I'm going to do a short trade? How do I study trim trades? How can I make it easier? How do I do my large time frame analysis? This one went 2 minutes, not 1 minute. So, anyway, strong top or bottom. What does that mean? What does the 50-50 look? What's the gap theory? My brother says this word a lot. He says it like 2 or 3 times a day, every day. Gap theory, gap theory, gap theory. What the hell is it? I know what it is, but you may not. So you may want to watch this 62-second video so you have all of this terminology. Keep it simple. 3 rules for a trim trade. If you're brand new, these 17 videos, which equate to about 17 minutes worth of watching, that's all you need. If you can't make money with this, you probably shouldn't be day trading. It's really that simple. Now, there's a lot more money to be made, as I showed you guys yesterday when we're looking at my trading plan. I don't want you to trade my trading plan. I mean, you can. That's why I give it to you. But I want you to come up with your own plan. One of the other cool things that we have is, not just those 60-second videos, but we also have, in our playlist, there's a playlist for indicators, there's a playlist for trade examples, there's a trade list for Ninja Trader how-tos, there's a playlist for live educational class recordings, and these are the ones like the ones that I've done. Is there only one video on that? And then ultimately, there's a Nexgen Software Services training playlist, and this is the one that has pretty much all of the good stuff. This is like 75, 100 hours worth of videos. So you're going to have to really be dedicated if you want to get through all those. If you guys want the short list, because who the hell doesn't want the shortcut? Check it out. I'm going to give you my short list of videos to watch. Everybody can download that little text right there if you want. And the thing about this video list, I've really spent a lot of time making sure this is right. Obviously, trigger line introduction, which is the same video that's in the user guide. Fibonacci areas and definitions, user guide again. The course overview video. Some of you guys have watched this, some of you guys haven't. It's on the demo page on our website. And then ultimately, remember that first 30-day video that I told you about which areas are good tops or good bottoms, and how to trade good tops versus bad tops and bottoms. Again, these are 4 basic videos that are already in the user guide. And then the next 4 videos, really 7 videos, are me teaching how to know if an area is going to hold or break for the most part. I kind of summarized the video. There's an introduction into the market flow indicators, which you guys probably watched that 33-minute video. And then there's a 3-hour session on how to do that. And then there's another video of me explaining divergence, which ones will be exits, which ones will be not. Then there's another video of me doing crude oil, where we have divergences, trend trades, and momentum trades. So, there's like 30 hours worth of videos here that you guys can go through. And again, they're all on YouTube, but this is kind of a short cheat list. If it was me and I was learning how to do Nexgen, this would be the list I would watch first, period. Makes it easy, you got it nice and easy. Have it done before the end of the weekend. You're probably going to want to watch most of those videos more than once, because if you have a photographic memory and you have the ability to retain 100% of the information you digest, let me know, because you're special. I remember probably about 70 to 85% of what I hear the first time I hear it, which is pretty good. It used to be a little higher, but I think it's slipping a little bit. If you don't remember things as well, you're going to have to spend more time with this. It's not, look, some of you guys are going to be more gifted at day trading off the bat than others. Some of you guys are going to have to work harder. The good news is everybody can do it and everybody can win. The difference is, are you going to do what's necessary to allow yourself to be a winner? And the first thing for all of you guys that haven't written a trading plan, write a damn trading plan. Even if you cheat and take one of ours and say it's yours, write a damn plan. I mean, come on. I mean, you know better. It's like putting your freaking 10-year-old in the car and saying, do you know all the rules of the road? Let's go drive down the freeway and see what happens. And let's leave our seatbelts off. I mean, that's about the equivalent of financial suicide. Don't do it without a plan. And again, look, we all stray from the plan, so I'm not going to profess being perfect. But when you can say, look, my plan says if this look happens, or this look happens, or this look happens, I'm going to put a trade on. Or, again, as we go forward, kind of 50-50, we'll see what happens here. But, we got the open of the market coming. So, we'll see if they have it in here. All right. 50-50 because we're straddling a 1-1 here. And we'll look at the live market. Yeah. Well, and again, look, it's very repetitive March class, which is great. That's what we want for new users. We want it to be repetitive. And it's very important that it's repetitive because, look, if you can't repeat the same thing every day over and over and over and over, you're never going to be successful. So, again, we're not going to watch the open of the NASDAQ. If you want to drive yourself absolutely insane bonkers, you can watch it, but it's literally like trading news, and it's just better to let it marinate for the first 15-30 minutes, which we're going to do. Now, trade management techniques. Everything that's in this trade management technique section is also in the PDF, the Everything Needed to Know PDF that I gave you guys. Trade management's probably one of the more challenging things. And again, for those of you who are new, this PDF also regurgitates the trim trade rules and regurgitates the look that must be present on your big chart to do a trim trade. And we also talk about rule number 2 for trim trades, which is do not trade into a quote-unquote termination condition. And look, termination condition is quite simply defined as, let me bring up the picture for you. Termination conditions are any Fibonacci-based indicator that could potentially reverse the market. You don't know if it's going to reverse the market. If you did, you'd be the only one on the planet. Only the man or woman or fund or whatever that has the most money can guarantee your top or bottom, because they could sell $150 million worth of contracts at a price, and it's going to be a top. So they're the only ones that can do it. We can't do it. But we have a really good idea of when and where the market is going to turn. A really, really good idea. And again, for us, it's pretty simple. If the red lines have down triggers, the red lines are probably going to hold. Area and direction. So the direction is down because of the triggers, the area is down because of resistance. This is the spot you'd like to sell. And then, look, this is the number one thing, and one of the videos that I put in my list touches on this. If the trigger lines do not get below support or resistance, or above resistance or below support, obviously, then the support has the potential to hold. Now, it doesn't mean it's going to hold, and it doesn't mean that eventually it can't break. But what we're talking about is in the moment, right here, when we touch, price touches Fibonacci support. And everybody give me a yes or a no, you understand what I'm saying. You have to check your trigger lines, and you have to check location, location, location. Number one, we're also going to check the strength, but more importantly, location first. And if they're located above support, it doesn't matter what happens on the whole wide world and the whole planet, you will not take another short trade because you will probably lose. So not only do you need to know when to trade, when you get the trend trade rules down, you need to know when to stop. And we've got lots of, conditions, right? Obviously, if we get to Fibonacci support, we have to stop going short, which is a good idea. If we do start taking short trades again, if we get to either a prior low, prior divergence low, support, we have to stop. This is what's called a pivot stop out. And it means that it's a double bottom at a prior divergence low. So in order to have a pivot stop out, you technically could have one without divergence. But in the way we talk about the word pivot stop out, it means that there was a divergence before the second attempt at the bottom. And when you test the bottom a second time, look, only one of two things can happen. Tell me if there's a third, but it either breaks and goes down or it reverses and goes up. Is there any other choice? If I missed one, please tell me. There's only two choices. It either breaks and goes down. Now, what did I tell you is the most important word about the trigger lines when you reach a line? I said it 3 times. I want to make sure you guys got it. What was the most important word? Nope. Starts with an L and ends in a location. Location. Location, 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 location. If you get to a line and the triggers are located above the line may hold. Now, momentum does play into it, of course, but, so look, this is an example of a lot of momentum into a blue line. We're not looking to do long trades when we have down momentum and the price gets a little below blue line. So we're not looking for long trades. But we can stop taking shorts, but we're not really looking for long trades. When we get to the second bottom, now we have 3 things going on, or 4 things going on that tell us that it's going to be a good bottom. Number 1, the small triggers are above the large triggers, which is a weakening look, meaning there's not as much momentum to the downside. We also have Fibonacci support, and we also have a prior divergence low. And then ultimately we have the trigger lines located above that line, which tells us that the line may hold, and this is where we want to be a little more assertive going to the long side. For those of you who do more assertive trades, like my white paint bar trade, in my trading plan, or a high volume area trade, something from the top or bottom, not a trend trade. Trend trades come way later. This is when you stop going short and you're looking for a reversal. Now, in the beginning, I want you to think about something. If you could buy the market here, and this is why people start gravitating towards my plan once they actually, Here, I want to make these arrows yellow so you know which one's true. If you could start buying the market right here, couldn't you make a lot more money before waiting for all the triggers to cross up and some type of pullback? So again, the better you get at reading the termination conditions, you'll start saying to yourself, well, if it's really going to hold, why not make a bunch of money before everything turns? So again, this is where in the beginning you're kind of stuck with trend trades because you're building your vocabulary. You're building your vocabulary on when to stop taking trades. You're building your vocabulary on when to start taking trades. You're building your vocabulary on good tops and bottoms. And again, look, here's another picture where you see the same thing. We have strong triggers going into resistance. And when you look at resistance and you look at the location of the triggers, are the triggers above the red line or are they below the red line? And it's really simple. Are they above or are they below? If they're below, it might hold. Now, because the triggers were strong up, it's probably not going to be a good top just yet. They usually bounce one more time. They'll get back to support. Then you'll hear things like gap theory, which means that there's a full bar back here large triggers. So, again, we expect it to stop at the red line because there's no triggers above it. Now, when you get back to the blue line, how many triggers are below this blue line? How many? If you look at where the triggers are and you look at the blue line, how many triggers are below the blue line? They're not even close. So the blue line is going to hold, probably, which takes us back up to the edge of resistance. Now, when you get to the edge of resistance, how many triggers are above it? 0. So now we have two red resistances. We have a prior divergence, and again, the small triggers are physically below this area, so we want to be more assertive. You don't have to be, sorry, let me rephrase that. I, personally, am looking for any freaking reason on God's green earth to start going short as quick as possible with that level. Does that make sense? So like when I go to my trading plan and I'm looking for, the very first trade, right? And I'm talking about, from tops or from bottoms and doing it, as quickly as possible, right? This is where we take triggers at fibs that don't get through. We have two lower divergences that say it's not going to go up. And then we can use things like a white paint bar with these down triggers to say, hey, let's be the first one in and see if we can make a lot more money. And, again, it's all predicated on being able to confidently read that the top is probably going to hold because no triggers have broken through it, and we have divergences. So, again, it's a 1, 2, 3 situation, and some of you guys aren't going to be good enough to use 3 charts right off the bat. That's okay. I have clients who bought our software in the year 2000. I think we have clients in here that have bought software as far back as 2006. Maybe even earlier. I want you to think about that. When they got the software, they're thinking, okay, I'm going to get this Nexgen thing. It's been out for 7 years. And now, 27 years into Nexgen, these guys have had software 10, 15, 17 years. And I promise you, while the software is moderately the same, mostly the same as it was back then, the way we teach and how we teach and the specificity at where we tell you to get in and out, or teach you how to get in and out and manage your trades is so much better now than it ever was. So you guys are very, very lucky to be with Nexgen right now because you guys have it the best. To anybody who's new, you guys literally, there's nobody on the planet who has it better than you guys. You guys have plans, you have alternate plans, you have every resource on the planet. All you need to do is work really hard on yourself. So, I know, that's not as easy said as done, but that's okay. You know, I just want you to think about something, because our new users get pissed off when they're not successful in 2 or 3 weeks. I swear to God, I had somebody the other day, he goes, I have the software a fucking month, and I'm not making any money. That's what he told me. I said, no shit, you've been at this a whole month, and you're not rich? I said, first, I had to bite my tongue, of course. And I said, look, this is a profession. And it's a difficult profession, right? If day trading and making $2,000-$3,000 a day was easy, who the hell would work? The economy would collapse. Most people can't do it, and you know why they can't do it? Rob, that wasn't you the other day, of course. But, I mean, that's what people think. And you look, smart people, successful at business, doing everything. Why can't I make a lot of money right off the bat? And it's because you don't have enough repetitions. You have to have a plan with rules that gives you repetitions. So, look, you guys, we went through my trading plan yesterday. And I did some trades this morning. Can I show them to you? And again, I posted my trades, and I want you guys to be able to digest. You know, this is the same thing we talked about yesterday in my trading plan. Remember, I had taken a long trade to get up to resistance. That was trade number 1. I think I actually, stick a picture. So look, this is where I went long. So look, let's go through it together, okay? You guys tell me if I'm off base on my own trading plan. Large chart, is it going up? Yes or no? Yes, it's going up. Do we have room until we hit a line? Yes, we do. So, what I was looking for, and you guys are getting a little more familiar with this idea, is I was looking to buy a pullback to the 1-to-1 with all of the triggers up, that's trend trade low. But I also had the benefit of my market flow chart triggers going really vertical strong to the upside. So not only did I have the large chart going up, which is first, then the second I had a strong up triggers and a support area to work with on this medium chart. And then ultimately I had my market flow chart gave me a 1 down, which is where I went long, and you're never going to get perfect fills with this. Could have got a little better fill, but look, you make 11 points, that's $440 on a 2-lot, whatever, 420, whatever that is. Anyway, I added on 1 in the middle, so I actually made a little more. Short version is I ended up making about $590 on the first long trade. And then in my plan it says, and we went through this like 77 times yesterday, so hopefully this is something moderately familiar. I will not take any more long trades if any resistance with divergence holds and my white paint bar closes below my 8 small triggers, which means white. Everybody okay with that? So, look, I followed my plan. Now, sadly, I just didn't go short because of the resistance, because that was the top. It went back up 1 bar or 2, and then it went straight down. Anyway, my next trade was go in order, chronological order. So look, this was that top way up here that, happened, and there was plenty of opportunities to go short, and for some reason I had my head up my butt, and I didn't take any of them. I didn't take that one or that one. And for some reason I finally got on board. I want you to start with the large chart. Tell me about the small trigger, large trigger combination. What do you guys think about that? Look, on the left. Pretty freaking good look, right? I mean, that's what I sit up here and preach it to you all day long. So, do we have strong triggers? Are they below the resistance? Do we have room to the blue line? The answer is yes. And it just so happened that my triggers were down strong, and I sold a 1 up, and then I put my stop below the down bar. Then I got another down bar, so I pulled my stop down. Look, I only had 2.25 points risk total to make 14. You only have to win half of those. Is everybody okay with this? And look, start with the left side. This is your traditional trend trade short. Look, everybody okay with that? And again, I got in a little bit, earlier because of the strength of this chart. And again, it kind of rolled up a little bit. But look, this is what it looked like when I did it. I should have done it way up here, but whatever. Shoulda, coulda, woulda. Anyway, the net result of that look was this. What do you guys think? I didn't know it was going to happen. I thought that there was a pretty good odds of it making it to the blue line support because of my large chart, but you don't know for real. So you get in, you manage. If it tells you to get out, you get out. If it doesn't, you try to stay in and make that money. These are my trades from my plan. You can do these too. Not that you can't do them. Alright, so, and then I did, hang on, I posted more pictures. I've already had a full day, guys, by the way. I decided because the trigger lines were below all of my fibs that I was going to take one more short. So, in true, the way I like to do it fashion, I went short after a bar up. And look, I said if there's 2 bars up, I'm going to just get the hell out. So I was only risking 3.25 points. Sometimes they make 2 up, but if they would have made 2 up, look what would have happened over here. I would have had divergence, and then I had a pivot stop out with a second divergence, which usually is kind of a bad thing, when you're close to fib area. So I was willing to give it 3.25 points, and let's see what happened. The outcome. So here is the trade just a bit later. And again, you can see where I got in, and my trading plan says take a couple $100 on some if it's weak. So I took a couple $100. And then I said, look, if I make more than a couple bars up, or I take out a 2-bar high, basically what the rule is, I'm going to get the hell out. And that was a low, by the way. So it never made it to the final target. So I got a couple $100, and then I got 3 or 4 points, 3 points out of it, and that was it. Now, going back to my rules and my plan, it says that if I have divergence and I get a white paint bar that's above my 8-3 triggers, I don't do any more shorts until we get below all the damn triggers. Because you get your ass kicked and you get your ass run over 9 ways to Sunday. So, anyway, my rule, my plan, you can see it, right? White paint bar above these 8-3 small triggers. Just don't go short again. So I was in already, I took some money, I got stopped out of the rest, and then it said, hey, don't do any more for now. Now, I did take a loser. So, little bastards. You gotta lose every once in a while. So, I was waiting to get below the triggers, and I had a market flow signal, and I closed below the triggers, and I closed below the triggers over here, and I was trying to get to 51, 52, and higher divergence took me out. So you can see my triggers gave out over here. I had a market flow long signal, I had a higher divergence, so I took a little loser right there. I'm okay with it. And then my next trade I posted all of them this morning for you guys so you can see them. So look, start with the large chart. We have up triggers, up large triggers, and the small triggers are above the large triggers, and we're at Fibonacci support at 70. Does everybody understand the words coming out of my mouth? I'll slow it down, I'll explain it more if need be. But blue support with the large triggers up, I was leaning to the upside. And what happened was, I was waiting for my market flow to say, hey, it's okay to go. So, you know, I got a high volume line that held, I got white pink bars up, I closed above all the triggers, I got a high volume line, which is what really sparked the whole party. And so because of the up triggers and support with up large triggers, I was looking for a long, and you know, I went long and I got half of it off, and then they stopped me out. They didn't finish the rest of the move. That was okay. Yeah, whatever happened. So it was a full win on half, and then it was a partial win on the second half. You can see it over here, right, on this chart, how everything went. It held, the small triggers got above the other triggers, and we have high volume lines, and it's support, and you know, again, when you lay it all together, it makes a lot of sense. Now, my plan to trade HVA areas, if I anticipate it's going up. HVA lines may not be in your wheelhouse yet. Remember we had talked about remember we had talked about this right here, how we had these really specific, very good top areas. These are the areas where you can do those high volume line trades and get in early. Right? This is the type of low that you can use to do the high volume area trade. You don't have to wait for the damn trip trade. You can. There's nothing wrong with that, but if you're going to call the low, why not get paid a little extra, the way I look at it, anyway. So those are the times in which, right, we do these tops and bottom type trades, or these high volume area trades. I have more that I posted. Bear with me, let me make sure, where was that? Okay, so we had this one, that was over. And then I did one more, and then I quit for the morning and I went to breakfast. Because I had to get ready. So I did a momentum short trade. Didn't we have a lot of conversation on this yesterday? About small triggers getting through one-to-ones as a momentum trade. And again, I started pulling my stop down pretty tight as it kept going. It made it to made it almost to the bottom. And that was it. Anyway, that was the last trade I did. You know, I'm up $810 a contract on $2. So, you know, look, when I go to my trading plan and I say, okay, in my trading plan, what the hell am I looking for? Right? What's my goal? And I say, self, my goal is 800 plus a contract. It's not that I won't keep trading. I will, unless I lose 200 and 800. But I have a plan for it. And again, look, if you don't have a plan, you're never going to follow it. So again, I have a plan for the types of trades that I'll do. Right? I'll do trend trades. Right? I traditionally will do more trend trades when the market flow chart is with me more than against me. If it's against me, it's really hard to get. I'll do HVA trades from the top and bottom. If it is a good top or bottom, a good termination condition. I'll do HVA breakouts. Now what the hell is that? That's a new thought. So again, An HVA trade is when the triggers are with you. If the triggers are against you, what happens is the HVA lines have a tendency to break. And when an HVA line breaks, as well as support, it usually becomes resistance, and then that's where we end up going the way. That's a breakout trade. Anyway, this one's a little bit different. You know, we talk about HVA trades from the top or bottom, which are great. But there's also HVA trades in the middle where you either get breakouts or the high volume line becomes support with all of the triggers, and then you can still use it. So there is a lot of ways to skin the cat. And if you're a month into using our software, there's no freaking way on God's green earth you're going to get it all. So relax. You're not going to get all the money right off the bat because you're not that good. If you were that good, you wouldn't have shown up to Nexgen. You'd be day trading and making a ton of money. So start off with you're not as good as you think you are, and it's going to take you some time to actually become a good trader because it's a skill. Have you ever seen these videos of these old fat people playing pickleball and they fall on their face? That would be the equivalent of that guy or girl going into the U.S. Open tennis match and saying, I'm ready to compete with the best of you. How's that for a vision? I mean, seriously, that's exactly what it's like. You're going to compete with the smartest people in the whole wide world that have the most resources on the planet, that have been doing this for 20 plus years, who have dedicated their life to taking people's money from them. And you're going to go beat them because you've got Nexgen. And you should be able to do it in a week or two because you're special. I'm being facetious a little bit, right? I mean, hopefully you know I am. Yeah, and I'm playing, but I'm not really playing. You know, after that guy cussed me out the other day because he's not making money. And I said, show me your plan. I don't have one. Show me all of the pictures that you've taken of your trades so I can see what you might be doing right or wrong. I think that's good. So if you want to watch insanity, watch the NASDAQ during news. What it is. I'll put it up for you guys so you can see it. It's freaking insane. That's why we don't play around when there's news on the NASDAQ. Hey. If the size 52 pant fits, Gino. Oh man, I have to. Crew's been doing this since the open. Alright guys, you know, unless you're an auctioneer, you can't really describe what's going on here. So look, let's just look at one chart. And we can start off with something pretty simple. We have a lot of support and we have a lot of resistance. And when one of those breaks, it will probably continue in the direction of the break. So would you guys agree that this is a pretty sweet top up here? Multiple divergences at multiple red lines. That's the equivalent of what we call a really good top. And then when we have a good top, we're going to do trend trades if and when our triggers are below resistance and we get a pullback into that resistance. So that would be a perfect trend trade short. Now, when we get to, remember, the prior divergence low, it's not that we can't break it, but we have to ask ourselves a question. If we get to a divergence low at a support, remember what the key word was? Location, location, location. Now we're located below. So now it will probably go, whereas it might not have gone before. There's not a lot of room to go until we get to the edge. Usually they make it to the edge once they break through an area and the triggers are going down. But again, look, this is right out of the book. Let's look at it again together. Check it out. You guys tell me. If we get to support and there's no triggers below it, we're going to stop taking short trades. That's short version. So here it is live in living color right now. So we'll see, and look, they could break. I don't care if they break or don't break. But when we get to the support, this is the spot where, we have to start asking ourselves the question. What's going to happen? Now, we have all of our triggers past the resistance. So, again, maybe one more down, maybe not. Again, this is where it's important to start looking at your smaller charts too. Right? You can't do a trade in a vacuum. And again, if there is divergence, again, look, this is my rule. It's so fast. It's hard to keep up with. Let me take a picture. It'll make it easier. Just freeze frame it for a second. Watch. Remember we were talking about short trades over here. And, this is that spot where we were talking about doing short trades. Then we had divergence from the low. And again, there's two really important components that we talk about, or I like to talk about anyway. And again, I want you to see them, and again, there's news, so this is really fast, so it's a lot. But for me personally, again, with divergence, if we get very much above our small triggers going up, I want to see price close below the small triggers to go short. Because the NASDAQ has a tendency to go screw people over who try to jump in the spot against divergence. And tell me if I'm wrong, NASDAQ traders. And again, look, this was the first bar that closed below the small triggers right here. You have to weigh out whether you still really want to do a short trade or not. Even if you did a short trade, the second higher divergence, which we talk about as a termination condition, right? So remember, divergence and then a higher divergence is usually the end of the party. And again, this is where, if you're using the market flow chart, it pretty much says the same thing. We had the divergence, and we never closed below the 8-3 triggers until over here. And then we had a high volume line, which created our second divergence to the upside, which also created my rule that says if the white paint bar is up and above the 8-3 triggers, I'm not going short. So we were asking ourselves, should we go short again? And when you look at this, the answer is not just no, but freaking hell no. No way on God's green earth. And you can start to see, we start to have small triggers rolling up, so we're not doing trend trades anyway, it doesn't really matter. Now, if you can't digest all of your rules and all of your indicator reading in less than 1.5 seconds, 2 seconds tops, you can't trade the next level. If you don't know your plan by heart, and you can't give an instant read as to what's right or wrong, don't trade the NASDAQ. You're going to get your ass kicked. Just don't do it. Don't do it. All right, now, market flow wise, look, this is where I drew that circle where we said we're not going to be going short anymore. And they came back down, retested the high volume area with a pivot stop out, and then, if you were inclined to take longs from support, this is your 2 triggers up, one down. Probably with the smalls above, this is a little better version. And you had the opportunity after support holds to go long up until resistance. And then, again, my rule, so I can't really Number one, if we get to resistance, what's the operative word, guys? First word that we talk about? Location. Location, 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 location. So when we get to resistance, we ask ourselves a simple question. Are the triggers above the damn red lines or not? And if the answer is no, they're not above the red lines, then there's a good chance the red lines are going to hold. And if the red lines should hold, at what point can you start taking short trades? I'll give you 3 circles where it's probably okay to take short trades. And then now, look, we just hit 1-to-1s in a blue line. Are all the triggers significantly below that blue line or not? Just quick, yes or no? That's it. The down party is over right there on the spot. And that's why you pay us a shit ton of money for software. Because not only do you know where it's going, you know probably where and when it's going to stop. Let me ask you a question. And I want you to answer this with all honesty. If you knew Tesla was going to go from 150 to 250, 80% chance, would you buy Tesla? It's the same thing here, guys. If you have an 80% chance that it's going to go from here to there, you can go long, you can go short. Then you also have to know when to stop, right? We're in a problem spot where resistance should hold and support might hold until it breaks. Obviously. Question. But look, when you look at this red line, doesn't it make sense? How many triggers are above that red line? I mean, number one, the direction of the triggers is significant. So this area did what it was supposed to do. It bounced the market up to resistance. And then once we get below resistance, there was never a pullback. This is the first pullback after you have triggers below resistance. So this is where you get one more short trade, and I'm going to give you a hint as to when it might end. You got multiple choices. You got this one, or you got this one. Now, what about this resistance? Should it hold based on the triggers? So damn fast. Yeah, fuck yeah, it's gonna hold. So shit out of it. One more time, get out at support even if you want. Probably gonna take it down here, but it's okay. So, sell number one, sell number two, exit number one, and then exit number two is coming up right here. And then once we get to 47, if we make it to 47, we've already made it far enough to stop. Now, look, and oh shit. Anyway, 47 was a fantastic target up until the time. Alright, one more time, guys. Red line. Should it hold or break? Probably going to hold. Next bar will tell us, but if it goes up anymore, it'll be over. That's our next line. Now, what is it going to take for us to want to do long trades? Number one, it's going to take some support that holds. So 1850 would be nice to see. We've already got our very first chink in the armor. Look, don't give up on your red line of resistance. How many triggers are above it, guys? How many triggers are above it? None. Still holding for now. Usually when they're supposed to hold, they do, and then they end up going to the little fancy blue line. And again, why you pay us for software. Now, you may not be quick enough to take advantage of all of this yet, especially on the NASDAQ, because the NASDAQ is freaking insane. And if you're not so, the NASDAQ is the, have you guys ever played video games with your kids? They used to try to get me on that damn Call of Duty. And I mean, I would like come to life, and within like 3 seconds, they would shoot me dead. And I couldn't even turn around spinning and looking up in the sky, trying to figure out what the hell's going on with that damn thing. Anyway, this is the same thing. This is video games on 10. And if you're not really good at playing video games, you're going to get wiped out. Obviously now we have the virgins, and our triggers are up. And we'll see what happens. Look, easy trades are going to be if we break through this resistance, like that. Right? So look, process repeats. We have a little resistance, which is probably going to pull us back down to support. Should the support hold based on what the triggers are doing? What do you think? Probably going to hold. We'll see how they treat this area in 2 seconds. Now, do we want to go long at support and mid bands if we expect it to hold? You don't have to, but most of our traders will take a shot at it. And again, because we did hit a resistance, it makes it more difficult, but held. Alright, we hit support again. Now look, triggers are down, so we don't have to worry about doing long trades, do we? All we're worried about at the moment is the support going to hold, yes or no, based on location. So we're doing a quick, super fast lesson on support holding or breaking. So right now the triggers are down strong, but they're still above our support window, which 47 to 50 is our window. Everybody okay with that? What is it going to take to do a long trade? Well, it's going to take a lot. They're going to have to go up, roll the triggers over. Now, my guess is, and I don't have to guess, eventually something's going to hold. Look, they may even go down and remember this little line that we drew in over here that they didn't quite get to? Sometimes they go down here and finish this business, which is okay too. So if we break through this, which we just did, this is where you're probably going to get one more short, like right there, to get to 1850, give or take. Can you see it? We broke support, everything's down, one more short trade, half of it at a prior divergence line, maybe, the other half at support. Can you see it? I mean, maybe it's helpful, doing it live. I hope it is. I mean, look, now we had a prior divergence, hit the stop out. Man, I really would still like to see it. So look, triggers were pretty strong, so I'm not overly excited about a good bottom yet. Not bad, but I don't quite believe it. I think they might have one more round, maybe, we'll see. You want to know the cool thing about the NASDAQ, guys? You don't have to wait long for opportunity. This is the whole day. All you need is a couple little smidges where everything is going your way. Let me get rid of it. That's all you need, just a couple little things where everything on God's green earth is going your way. Take a few points. I mean, unless you totally screw the pooch, there's no way not to make a little bit of money. And you can screw the pooch pretty easy on NASDAQ, I'm just telling you. Alright, before it happens, yes or no? We're going to 18 to 22? Yeah. Oh. So look, we've had a pivot stop out, so there's no effing way we're going short again, period, no matter what happens. It's probably going to get to here. But now this is the type of area where we we start to perk up and go, look, I want to go long as quick as possible because I already knew in advance, before it even happens, that this area may hold. So in this situation, I would ask myself questions. I'd say, do I have other reasons why we might think this bottom may hold? Hell yeah, what do you think? And I don't know if it will or not, it's still red, but we've got support held, we have divergence, we have one-to-ones, we have more divergence. This is about the line in the sand right here. It's either going to break this and then it could be nasty. Now, triggers are strong, it breaks it, there's divergence. Anytime I get divergence through one-to-one, it's a
order filled.
Look, I'm going to show you guys something.
Stop filled. Order filled.
High volume area trade. I'm going to show it to you if I can take a picture of it real quick.
Stop filled.
Let's see what's calling me. Yeah. Alright, I tried to cheat a little bit. Hang on just a second. I got a phone call that I need to get to. I was a smidge early. This is the second chance.
Order filled.
At buying a bottom, I know it's probably not. Oh, we have divergence. At least it's not lost.
Target filled.
Target 1. Let's see if we can put it at resistance.
Target filled.
Target 2. I was a little early on the first one. They got me. The second one worked. I'm going to show it to you, okay? You ready? The first one I did was right here. High volume one. Because I anticipated the bottom. The triggers were a little iffy on that one. You see that? And then the second one, the triggers, this is why I went the second time. The triggers were much better at the high volume on the second time. And that's what you call easy money. So this one was wrong. I broke a rule because I was a little excited trying to show you guys. Now, when the triggers roll up, look at the difference. You guys see the difference? This one, I took a chance and it got me. And then this one was more in line with the rules and it was a hell of a lot easier. And then ultimately, Nasdaq's crazy. Again, look, let's go back to the big chart. And again, we talked about this area might hold. Secondary support right here, this area might hold. I think the second time, you guys tell me if I'm crazy, but the second time we're at this fib, the triggers were way, way, way better for going to the upside. What do you think from here? The triggers were way above the blue fib, so that's a better support than what I was a little early because of the market flow. And then ultimately, look, we hit termination conditions up here. They're not going to hold. Eventually, they're going to go back up again, probably. Right? So we had strong triggers into them, so they usually will come up and take a second stab. And then look, whatever happens at 1950 is going to determine what happens next. Really, I guess we have a second fib here. Probably 1957. So this is the edge of fibs. The line in the sand, I mean, 50 could be a line in the sand, but the guess is we make it to the edge of fibs. And then if we break through, you can keep doing trend trade longs until the cows come home. Right? The lean is, so look, we're there. Now we're getting through. You can go long until the cows come home. Everybody cool with that? 59 or so, something like that, right in there. Not too lose. Anyway, still should go up. It went a little further because it's the Nasdaq and that's what they do. They're going to end up going probably from here up to about the 73. You can tell because that's the next fib. Assuming they go. So you can start to build these areas of support and resistance. And I'm not looking at any small charts, am I? I don't need the small chart to determine where it's going to go. I need the small chart to help define my entries and tell me when it's okay to go ahead and pull the trigger, like now, probably. Andyman, you're talking about this fib up here. Why is it skippy line like this? Well, in the indicator, all right, so look, we hit the line, as expected. Now, when the triggers get past it, it turns blue, more longs until the cows come on. Let's should keep going. But what happens is, in these synthetic fibs, so there's two types of fibs on our chart. Let me give you a quick, I know Mark has a picture for this, but I have no freaking clue where it is. So look, the lines that extend out to the right are fibs from this time frame. So 34.5 time frame, the fibs extend out to the right. All of the fibs, let me use a different color, that end on the current bar are from a different time frame, either the 55.8 or 23 or whatever, 13.2. So they're all fibs from different time frames, and they don't extend out to the right; they're just current. And each time frame only has one support and one resistance. So when we look at this, look, see this big fat blue line? That's from a 55.8 chart. And this big fat blue line, that's from a 55.8 chart. And then this line is probably from a 13.2 chart. And maybe this one or this one, I can't tell which. But anyway, I have to look at the chart. So there's only one support and one resistance per synthetic time frame that's superimposed. And then whenever one of them breaks with up triggers, it will change colors. So what we ended up having over here, just to show you, this is just mechanics. I mean, it doesn't really make any money or lose any money, but so you understand. So when this fib area breaks, and you can see it right here, look. Once this fib area breaks and the triggers are going up, it says, hey, what's the next resistance? And then when the triggers cross back down, it says, okay, we probably are not going to make it there. So stop plotting it, because now we've closed below, and let's plot this resistance again from that 13.2. And then when it goes back up and closes above it, it says, hey, let's plot the support from the 13.2, the resistance from the 13.2, and then a little below, a little above, and then it comes back again. So it's dynamically saying, okay, we need to watch out for the next resistance. Oh, no, we don't. We need to watch out for the next resistance. Oh, no, we don't. We need to watch out for the next resistance. And then it's stuck. And then once that resistance breaks, it says, okay, what's the next resistance? Does that make sense? So each of the synthetic time frames is doing this. The original ones that have numbers on them are from the original time frame, this chart. So they just stick. They don't ever change. And there's more than one. There's a lot of them. But there's only one of each on the synthetic. Alright, so we made it to a fib within a couple of ticks. And then we had divergence. We love divergence. It usually means the market's going to keep going. So look, divergence over here. Look what happened to the market. Divergence up top. Look what happened to the market. Is there any spot where we pull back to the large trigger where somebody could conceivably take trade shorts with wide triggers and pull back to the large? You can see it, right? And then look, we get to a fib and then it breaks and then we get a pullback for more shorts and then now we are in a termination spot yet again, and we have to figure out what the market wants to do. Does it want to hold this area again, or is it going to break it? I don't know. Good chance it holds at the moment because location. Now, if it breaks, guess where we're going, guys? 10 o'clock. So right now, right here, right now, you don't have to worry about going short anymore. Conceivably, if they're going to hold this area of support, let's see what happens. Alright, helpful? Just going through it together and seeing it and talking about it, hopefully helpful. Yeah, let's see, they gave way. Sell, Mortimer, sell. Then look, we were never thinking long. Hopefully, you were never thinking long. It's short. And you see how many freaking opportunities there are? If you just wait for strong triggers and a pullback on the NASDAQ, I mean, look, you can buy and sell off the fibs and you can make a shit ton of money. That's fine. There's extra opportunities, but you don't have to have them on the NASDAQ. You may take a loser every once in a while and get run over, but the winners on the NASDAQ are freaking huge. Alright, I need to follow up on this phone call I got. Very important. So let's take a break, 5-minute break. I'll be right back. You guys let me know if you have any questions. We'll be on mute for a minute. Alright everybody, I am back. Appreciate the break. So obviously, we were talking about taking a break here. Hopefully, if you guys were, inclined, there's a little teeny tiny opportunity to make a few $100 right here. Obviously, we hit resistance. One of my favorite looks on the NASDAQ, guys. Divergence with a higher divergence, and it almost always means you can go long. The only bad part of that is you had divergence from 1-to-1s, which is another one of my rules that says don't go long just yet. But you will be able to probably eventually, we'll see. It might be the second chance at it. Alright, so now we have everything going up. We have a third divergence, and there's no way on God's green earth to get into the damn thing before it hits resistance. So the market did what it was supposed to do. This is one where you don't get paid for knowing what you know, because nothing really set up. This is the hard part about trading the NASDAQ. Because you're like, God bless it, I know it's going up to 917, and you're like, give me something. And then it's like, damn it, and it goes all the way to your target, you don't get it, trades it up. Now, we've hit resistance with divergence, which means what? We have to ask ourselves, should we take short trades? So, divergence from fibs is usually one good sign of short trades. What's the problem here, guys? I mean, if you did a short trade, okay, that's fine, you can manage it. But the problem is we have some support here. Now, I want to go back and slow this down a little bit. Do you remember when I said this first 30 days and beyond video that we were talking about here? Here, I'll put it on here. It's an older video. It's from a couple years ago. Tony, the answer is no, you did not have a termination. You had a line, but it wasn't a termination. And I'm going to show you in this video exactly where I discussed this. Okay. So, alright, this is a bit of a busy picture. I'm going to explain it to you slowly so you get it, okay? Now, if you watch the video at 37 minutes into it, this is like everything on God's green earth you need to know, but I'm going to explain it to you. So look, we have the edge of fibs up here. Okay, so I'll use a little red box. Everybody okay with this? Right here, this red box. So we have fibs, and the triggers are really freaking strong. And I even wrote it, strong triggers into fibs. It's not as strong as at the top, but we're not going to do any more long triggers. Usually when you have strong trigs into a fib, you're going to get one more bounce up, just like half of the pictures in our user graph. And, mid bands, fibs, usually makes the market go back up. Now, when it goes back up, and we talked a lot about this already this morning, we talked about, see this double circle here? This is where your chart reading skills come into play. Let me blow this up a little bit for you guys so it's easy peasy, okay? This is where your chart reading skills come into play before you make too many big decisions. So, do you see the difference over here on the left, what the trigger lines look like at resistance, and then what the trigger lines, location, 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 location is doing at this fib? Do you see the significant difference in lower triggers at a fib? So, very, very significant difference. So this ends up being what's called a really good top. And it's explained in the video, and you can watch the video later, but just take my word for it. And this is where most new users, and my brother actually him and I go round and round on this 9 ways to Sunday because he's like, new users can't get this yet. I said, I know, but you still have to teach it this way, and he's still very reluctant. He doesn't like doing trades into the mid-bands. And, you know, this is where the new users end up skipping short trades because they go, oh, I hit a fib. And that's exactly what Tony said. He said there's termination condition. But it's not a termination condition, and this is why I want you to watch the video. Based on the quality of the top, the weakness of the triggers, the location of the triggers, and then the width and momentum of the triggers, you can actually anticipate that because of this top, that this bottom's going to break. Now, I mean, it doesn't have to, but you anticipate that it's going to break so you don't skip your short trades because there's a line here, because the line's not going to hold. And what that means is you end up making really big trades instead of getting in, getting out, getting in, getting out. You say, no, that's it. So, but again, this is why people who just got our software, who are a week or 2 or 4 weeks into it, who cuss me out because they're not rich yet, you haven't seen this enough times to feel comfortable trading into a blue line. Have you ever seen a little kid, this is the big chart. Everything starts on the big chart. Have you ever seen a little kid at the pool when they first get up on the diving board and they sit up there for hours and you try, the whole pool's trying to talk them to jump? I mean, they just won't freaking do it, right? And then after they jump a couple times, you can't ever get them out of the pool. They do it hundreds and hundreds and hundreds of times, so they're not scared anymore. And it's the same thing with day trading. You're a 5-year-old on the high dive, and you're trying to figure out whether you should jump or not, and you're not sure. And this is why we teach you and go over it and over and over it, because eventually, when you say this was so good that this is going to break because of the width of the triggers, you start trading into these areas. And look, if you get short and you take half of it off and see what happens, that's okay. You don't have to just hang on for dear life on every trade. That's not what it's about. Take your $200, get your stop down, and if it breaks through, try to find another place to add on. But anyway, you know, look, this is why you're not going to be great in the first month of next year. I always tell everybody, look, it's going to take you a month to learn the rules. Right? Maybe less. I mean, you should probably learn trim trade rules in a week. I mean, unless you're just straight up not that bright, it's not hard. Triggers are going down strong, sell a pullback. Triggers are going up strong, buy a pullback. That's not the hard part, guys. That is not the hard part. That's the easiest part at all. But you have to have your management down. You have to have your chart reading down. You have to have an anticipation of what I put in this PDF. You know, and again, look, this is what we teach. But these are the 3 skills that you have to have perfected, and you have to have a plan, and you have to be able to follow your plan in order to make money. Skill number 1, chart reading. If you can't do what I just did in front of the class, you're not that good. I promise you $1,000 right now, I could take somebody who's had our software for 10 years, put them on the mic, and they could give you the exact same analysis I do without any trouble. If you can't do it instantaneously and say, this area should hold, that area might break, this one's going to break, that one's not going to break, and you can't do it instantaneously, you're not ready yet. And it's okay. It just means that you need more work. You're not a professional yet. You're not highly skilled yet. That's okay. If you honestly tell yourself, I'm great and I should be making money, that's when people quit. Because they get that in their head that they're great and they should be making money, so because they're not, they get frustrated. And, look, failure in day trading happens to everybody. I've had one person, or maybe two or three in the last 27 years, who bought software, learned the rules, simulated long enough, and started making real money, and then they just went on. And they never looked back. Like 3 people out of tens of thousands. Trust me when I tell you, you're not as good as you think you are yet, and you have a long time. It's going to take you 3 months minimum to go, okay, I'm starting to feel comfortable. And look, somebody call bullshit on me. If I'm wrong, you just tell me. 3 months to where you're like, oh, I think I got it. And then you start trading and you start doing funded accounts. You blow them all out and you're like, oh, maybe I don't have it yet. And then you go back and you say, what am I doing wrong? Where are my losers happening? Am I following my rules? Usually you're not. Usually you're making management mistakes or entry mistakes. So you have to work another 3 to 6 months to clean those up, which is very frustrating because who the hell wants to work for 6 to 9 months to make money? You bought software. You're entitled to be rich. Hey, $150,000 a copy of software is what I would charge if you could just buy software and get rich without any work. Maybe $250,000. When you pay $16,500 or $10,000 for software, that's like buying a Honda Accord and saying I should be able to run this thing in an NASCAR. People are really, they honestly believe this and they tell themselves this in their head, and this is why people get frustrated. And if you just relax and say, look, I'm not as good at reading my chart as I thought I was. Let me work on when the market is likely to continue, where it's likely to go, and when it's likely to stop. You know what I did for years and years and years and years, and I'm talking long ago? I downloaded a week's worth of market replay. And everybody knows how to do that, right? I want to make sure you guys know how to do market replay. It's in the...
It makes a ton, but it's not a great...
So...
and again, the stronger the triggers are the first time, usually...
Let me close that. So, market replay. Where the hell is it? Hang on a second. Where the hell is my market replay? Anyway. Jeez. I guess this goes and tells you how long it's been since I've been teaching classes. Look, when you do market replay, what I did is I downloaded a week's worth of market replay. And all I did was I put up the big chart. And I didn't do anything else. And I played it at like 50 times speed or 100 times speed. Of course, you can't do that with Nasdaq. But look at what we have. Divergence, lower divergence. One of my favorite patterns. The chances of us getting above 57 right now are slim. So if we get to 57 again, this could be a really good top. Anyway. But what I did is I replayed it and I said, as it was zipping by, right? So it was going like this. I would be watching the right edge and I'm like, up, down, okay, we're going down, now we're going up, now we're going down, now we're going up. And I would literally just sit and watch it. I mean, not that fast, I'm just giving you an example. And I would say to myself, we're going up, we're going down, we're going up, we're going down, and you have to be able to just read your chart. I wasn't trying to trade or do replay or execute trades. I was just trying to know whether it's going to go up or down, right? So like right now, we're going up, maybe, because support might hold, right? No triggers are below it. I don't have to guess, I can see it. So we're going to go up, and we're going to go up to here, and then when we get to here, we're going to decide whether or not we're going to go back down again, or whether we're going to break through. So I literally got really good at just drawing boxes, and I could draw a line and tell you exactly where it's going to go and why it's going to go there, which we just did. And people will be like, damn, you're good at that. And I'm like, yeah, because I've spent 1,000 freaking hours studying just whether it should go up or down. What else is more important than knowing where it might stop and where it might go? If you come up with something more important than that initially, let me know. I don't think there is anything more important. Because if you really know where it's going, right, like when we break support, we'll go back down to here. When is that going to happen? I don't know. It may never happen. Or if we break 58, we're going to go up to wherever the hell that is. Oh, I think we're going down first because resistance is very good. Anyway. And then look, once you get the we're going down or up, then it becomes pretty easy to say, okay, I should take a short trade or not, right? This is a pivot stop out of a divergence low. How many triggers are below that? I just drew a box in there. How many triggers are below? 0. That's a termination condition, which means, you know, short trades are probably not going to work as well. I would lean more to the short side than on anything else, but it's a termination. Now, remember the picture that I gave you guys just a minute ago? Where I said, you can trade into a termination condition. Holy crap, wait a minute. If you had a very strong top with divergence and the triggers were strong, maybe you can trade into a line. Well, what do you think? We had divergence, we had weak triggers, we had a pivot stop out. What was the condition of the trigger lines over here? Were they strong enough to suggest that we may still go down again? Of course they were. Now, we have another one-to-one termination. So we have to assess what's going to happen up here. Not down here. And again, we talked about potentially we make it down to support again. We'll see. One-to-ones are really tough to get through. And again, look, you can never know all of it from just a big chart. You can't see change happening. Really? Come on. You can't see change happening on big chart. I drew too many lines. Too many pictures. You know, if you draw on your ninja charts too much, you wouldn't like it. The thing that takes Ninja Trader down is the .net .drawing.dll. Alright, so there's my money for today, by the way. There's my take profit. Trying to get rid of the money during the day, try to spend more time on chart reading. Anyway, big chart says, small chart says, then we get to do it. Your cousin dove in and couldn't swim. Yeah, look. How many years, Steve had this sheet. How many years does it take to become a doctor, a lawyer? How many years does it take to become a professional plumber, right? A professional, not just a worker. How long does it take to become an airline pilot? It's a long time and a lot of work for every professional on the planet. How many years do people put in to become professional golfers? how many hours and thousands and thousands and thousands of reps do they do? Daily. Million shots they take. I was watching Bryson DeChambeau. Do you ever watch any of his little podcasts where they try to break 50? He had one on the other day with Tom Brady, and had one with Trump on there. Not to get political. I'm just saying he's got other celebrities, long drive champions, and they play the red tees and they try to break 50. It's really fun. Anyway, if you're into golf, it's something to watch. But, you know, most professions it takes, say, 10, 12 years. And day traders think because they bought software, they're entitled to be great at something just because they bought a tool. If you're not a great painter and you bought the best paint and the best paintbrush and the best easel and the best canvas on the planet, you're still not going to be a great painter. It just doesn't happen. Now, you can work to become a great painter, which is awesome, but you don't get to buy the right. And it's the same thing with software. You know, look, you're buying a great tool that will give you a distinct advantage over the market. You're also paying for education, right? For us to be able to help you reach your goals and objectives. Once you actually, you know, make peace with the fact that you have to have a plan, not only a plan, but you have to be able to execute that plan flawlessly and instantaneously. I'm expecting this to be a bottom. Now we got a good bottom. See how we have divergence kicking in and our triggers are rolling up above everything? So we're making a really good case for divergence, higher divergence, a little overrun of the fib. But it's a really good case for probably going long.
Order filled.
I would guess. I mean, I'm kind of doing it into determination here.
Target
So,
filled.
there's my first target. Oh, you guys can't see that. I actually did it on my TikTok trader.
Stop filled.
But I'm okay with that too. So I went long here on a down bar, and then obviously just a little one. It's still going to keep going because of the big charts. I took it quick. You guys didn't see it because I didn't do it on Zoom. That's my bad. Anyway, hopefully you see it. That's a momentum trade, guys. Does it make sense to you if you look at it? Glad I got out. So we had divergence, multiple divergences, all of our triggers going strong. And again, look, if I was to label the trade or take a picture of the trade, and I posted it in the chat room for feedback, I would say long here, right? And my rules are, I would do some extra labeling, divergence, and then two higher divergences, not shown, and then I would say momentum long, and I would say one down entry. So that's my plan. And then exit half and we'll stop up. And so anyway, I exited half. I wanted to see if they're going to break through. So I gave up a little money on the second half. Didn't lose it either. So I made half of a win for 10 points and then a few points on the second half. Okay. Now, once I got to the fib, you know, hopefully, you know, look, these are the ones that, Adriana, probably the end of next month. We've had some software slowdowns, let's just say, and it's not a bad thing. You know, the software is the key component for any business in what we do, and because we're not using NinjaTrader, there's a lot of stuff we've had to build on the back that I didn't really anticipate. And short version, probably 6-7 weeks we'll be done. I mean, it could be quicker, but realistically, look, I don't give a rat's ass if it's the end of November. As long as it's right. The only thing that I care about is that it's perfect, it doesn't crash, it doesn't crash like NinjaTrader, our copier works perfectly, it doesn't do any stupid shit like NinjaTrader's copiers. Everybody has copier frustration, right? You've all had it, hopefully. Hopefully you haven't, but almost everybody has. So I'm building a standard. Uh-oh, that's a low. Look at that. Second higher divergence. I missed the long. Anyway, second higher divergence from 1-to-1s. There was another HVA long trade right there. I can show it to you. I didn't take it because I was talking. You know, look, it's really, really, really important to me that when we do this, it's perfect. No crashes, no copier issues, and you know we're gonna do ours from a Nexgen perspective. You know, all of these damn funding businesses churn and burn. They're after the fees. And look, I want fees too. I'm not saying I don't. We're gonna get fees. I'm not worried about that. But I want people to win. And, you know, I'll let you in on the secret. Are you guys ready? If you're a winner, they're copying your trades. If you're a loser, they're taking your fees. I'm just giving you the business model. So if you're a winner, they're, you know, part of the contract. If you read it, is they can copy your trades. So, you know, again, this is where they take the top 5% and then they copy all those trades, and then maybe they even do it at more than 100%, and then they make a bunch of money on the traders that win, and then they make a bunch of money on the traders that lose from fees. And we're going to be doing it in a slightly different way. We're going to be doing it in a, if you lose and you suck and you keep blowing out accounts, we're going to help you. We're going to give you a trading plan. We're gonna make you have, we can't make you do anything, but we're gonna give you the resources to be able to be successful with your trading, let's put it that way. And kind of anticipating this to be short trading here somewhere, but it's just not. My filter kept me out from taking a short. Remember what my filter is? I told you guys. I'll give you a picture of it. My filter says if you have a white paint bar and close above the 8.3 triggers, don't go short unless you're below them, and we never were. So, you know, again, look, there's a threshold. I mean, look, I don't know about you, but most people have done 150 of those stupid funded accounts. Some people have done 300 or 400, 500 of them. If you're doing 300 or 400, 500 funded accounts and you blow them out, there's a missing component. Can we agree to that? And if buying Nexgen gave you everything that you needed, then
Order filled.
a little bit late, but it's okay to be late as long as you win. Oh, man. Oh, man.
Target filled.
See if I get the rest of it here. If I make a second divergence, I'm going to be out. I'm trying to get down to 97.50.
Stop filled.
Alright. Took $100. Whatever. Does everybody understand that trend trade short? I mean, I hope to God you do. It's pretty straightforward on that one. That was like textbook. Everything broke, everything was down. We made it down to 1900, 1909. I probably should have flat 6 earlier, whatever. That's just on Sim. I'm over my goal on the other one. Anyway, I have a question for you guys. Another question, as if I don't have enough questions. Everybody's seen Sophia trading, right? Lately, kicking ass, taking names. Everybody who's in our trader chat. I have spent time with Janesh, who's another long client of ours. Let's just say he pointed her in the right direction. And they went through a bunch of stuff that, you know, Nexgen does a really, we as a company do a really good job of teaching indicators, teaching rules, teaching basics, giving you the raw material for everything you need. And look, you guys all bought software, lease software, so you agree. There are those who are missing something, and Saturday I'm doing a seminar. I'm a participant in a seminar. So I'm not actually giving the seminar, I'm actually taking the seminar. And the only reason I'm taking it is so I can see what the hell's going on in short version. I'm going to give you a visual of it. Janesh Patel and Sophia are going to do a couple of things. Here, I'm going to give you guys just a picture of this real quick. So you have it. And we're putting people on a list. They're going to do 5 to 10 people a week. And they're going to do something that's going to be a little bit different than what Nexgen does. And I honestly believe it's going to, for those who just can't pull their head out of their ass and get it, for whatever reason, there's a few different reasons. Number one, they don't understand market structure, price action, analytical thinking. They don't have a good concept of risk management. But one of the other things that I love, it's called accountability. Accountability is one of those things that you guys as day traders have absolutely nobody to answer to, unless your spouse hates your fucking guts for losing all the money. That's the only accountability that usually happens in day trading. I'm just going to say it. If your spouse hates your guts for losing all your money, you get some accountability and they say you better win or you're going to have to quit. Janesh and Sophia are going to open, they're going to do a seminar, okay? It's going to be about 5 or 6 hours on a Sunday. And it's based around our trades, so you don't have to relearn any new trades. But they're going to teach you how to use our software the way they're doing it, using market structure, trading at the right time, when not to trade, and then they're going to do something I think is fantastic, which is accountability sessions every day with the traders, where you take your trading journal and you take your losers and you go through each of them and why did you lose, and they're going to go through that with each of the traders every day, which is a lot of freaking work. I don't want to do it. I mean, we can go through people's trades, but we're going to do it in a little different way. And it's basically a week-long course, and they're going to do 2 days of live trading in there. And I have not promoted anybody else's webinar or seminar ever, so this is the first time. And I'm really, really excited about it. Now, $5,000 to do it, but for the first people that get in, we're going to do $3,750. So if you're interested in having somebody to be accountable to and to fill in the missing pieces because you just can't get it, you're on your 400 account, and it's time to add a little layer, you may want to think about doing this. And I'm doing the first one, Saturday. No, you guys aren't allowed to do it. I'm doing it. me and all the people at Nexgen are doing. And number one, we want to see it. And number two, have a practice run. But, you know, between Sophia and somebody else, there's another case study. And let's just say everybody's doing quite well. It's not a guarantee that everybody's going to do well. But if you are interested, no, it's not going to be recorded for you. It's a live event, Sunday, for 6 hours. And they're not starting this until October 12th, I believe, is the first one. I've already got a person or two on the list for that, but if you're interested, get with me or either your salesperson or whatever. I'll just put you in touch with Janesh. That's another way to do it. Actually, their website's on the flyer. You guys can but if you're with Nexgen, it'll be $37.50. And I honestly think, and again, you know, look, I can't guarantee, but the proof will be in the pudding. For those who struggle, who need something else, this is going to be the missing link, I think. Because it's not our software, right? If buying our software and sitting in class for a year or two is the answer, and you're still not making money, then you have to do something different. And so, anyway, we've got something different for you. And I think it's going to be super advantageous. And they trade the NASDAQ, by the way. You know, Janesh spent his last 8 years with Nexgen trading crude oil. He does very, very well. After his 13-year-old daughter outtrades most of you, I'm pretty sure you got it right. Anyway, just want to throw it out there just so you guys know. Maybe 5 to 7 or 8 people in the first week is what we're going to end up doing. And actually, I'm not doing it. They're doing it. So, it's not me technically. But they have my full blessing. Unlike the other people who try to scam people out of money to train them out of our check, who don't have my blessing. And if you paid for any and you didn't actually make any money, then good for you. Anyway, needless to say, no hate involved in any of it. Are you guys ready?
Order filled.
Oh, man, I was a little bit late. Bigger stop.
Order filled.
Okay, long trade. Should at least get up to there. Man, I got such a bad fill. Really bad fill.
Stop filled.
Anyway, that's my target by a tick. I was going to show you guys, look, for me, and this is probably my second chance right here.
Order filled.
For me, you know, these are the types of, let's see, there we go.
Stop filled.
The high volume trade from the termination condition. So we had a big 1-to-1 on the other chart.
Order filled.
And I'll take a second chance at it. Let's see if we can get going here. So again, 10 points on the first one. We'll go 44.75. Trying to buy the market has been very difficult today. But see how I'm going a little bit early? No, that's this. It doesn't go right now. I'm pushing my luck a little bit, trying to go long first. And I'm doing it based on market flow charts. So it's early. So sometimes when you go early, it doesn't work out.
Stop filled.
That's trouble right there. Get the break even. Anyway. Alright, that was my early attempt at going long, and it's probably still going to stop and go up, but it's not strong enough to hang on for dear life when you get to one-to-ones and stuff, so anyway. I don't know where my one-to-one just went. Let me refresh my chart here real quick. Something just happened. It's like all my one-to-ones and fibs disappeared. No. I clicked F5 on my keyboard. What the hell? It disappeared on me. Alright. I'll reload it on the screen. I guess when I crashed, David, you got the brochure. I'll put it in. Oh, I forgot to hit send. Sorry, guys. They'll have a place to pay on the website too. This is one of my termination conditions right here, guys. Do you see this one-to-one with a divergence at the bottom? That's one of my termination conditions that stops me from doing trim trades. I'm not saying that the market can't go down anymore or it can't. Those are the ones that traditionally cause the market to pause a little too much. I'm reloading my data. I'd venture to say if we don't take out 34, then there won't be any more shorts. If we do, then there might be shorts. My guess is shorts are going to be very difficult at this point. We'll see. Until we get below here, and then if we get below, we're going to get a momentum short if we get through here. So large charts down. Let's just say we're going to 810. I mean 813. So we have a target in mind. Now I got to get to 2050 now. Easier momentum trade. Usually once you have divergence on the low side, when you have divergence on the high side, it helps to resume the trend to the downside. And my guess is we're going down. 2850 is going to be our next line in the sand, so to speak. One-to-ones have a tendency. And the same thing up top. This will also be line in the sand for whether we break and continue down or whether we break this and continue up. Probably going to go down and finish the move. That'd be my guess. So we got a little wishy-washy in here. A higher divergence is going to ruin the party. So look, you basically can say, look, as long as we don't take out or put in a second higher divergence, the party to the downside can keep going. To do a momentum trade, we want to have the small triggers below the one-to-ones. So something like that. And then traditionally we're going to sell on the way
Order
back up.
filled.
And then as long as they don't lose momentum, we'll take it back down to the next Fibonacci support. And look, now I can go break even because if we make divergence or up bars, I've lost momentum. You see that? So, again, I don't even have to technically.
Stop filled.
I don't have to risk any money, which, again, that's so fast. Did you guys get that? Momentum trade short. Obviously, if you lose momentum, the party's over. It can still become a trend trade short, which it has. It's still going down. There's no reason to technically be out if you were a little more patient with it. I don't mind a break even, guys. Break evens don't break the bank. Alright, now they just wanted to run everybody out so they can go in again. Ready to go finish the move off to the downside?
Order submitted. Order filled.
Usually they do. If they make a third higher divergence, then the party's really over. So it makes management really easy.
Stop filled.
If we make 2 bars up, we're going to make divergence. So if I lose it, then it's probably going to go a lot higher with third divergence, which it did. Yeah, they're just a mess. Anyway, questions, comments, concerns, things you guys want to go through. Anything that is bothering you, any questions you want to have answered. Yeah, I answered that question earlier, but I'll do it again. The answer is yes, that is the whole point of what we do. I mean, look, when you look at the big chart, whatever your chart is, it doesn't matter. That is the trend drift. Now, they still use areas, support, resistance, one-to-ones, so they didn't throw out the baby in the bathwater. Yes, 100%. That's the point of what we do here. Everybody post pictures of your trades. I'll be more than happy to give you the what for on all of them. But they don't, Steve, let me make sure that we're being 100% clear. They don't just get in at the large triggers. They're still using the rules for fib areas, one-to-ones, high volume areas, whatever, some type of support or resistance to help them out. Because look, if all the support is just above the large triggers, then you can't buy at the large triggers, you have to buy above the large triggers. If all the support's at the bottom of the large triggers, then you got to get in closer to the bottom. So it just depends on the dynamics of your smaller chart too. They don't ignore the other charts. Does that make sense? So this is just step 1 of large triggers, bars above, buy pullbacks. Alright, everybody post in your trade. Cindy, I want to see what you got. Alright, let's see. Okay, so a good top, and the market's going down, and you went short. And since you were sliding into some one-to-ones, you got your stop down and took a target there and then got out if you lost momentum. Awesome job. I love an outer band exit with a loss of momentum as an exit. That's an awesome trade. Easy money right there. Nice job. Look, winners are great, guys, but I'm going to tell you...
I want you to develop a different mindset.
Okay, so this is a video that Abdul put in. Here, I'm going to save that for later. I'll watch it later. Thank you for that. You know, I love videos, and I don't know, how much time do you guys spend on YouTube a day? I usually spend an hour or 2 a day on YouTube. There's so much information out there. Anyway. Alright. Anybody else? It's time to post in trades. I'm going backwards a little bit. I got a few that were posted that I didn't get. Adriana, I got one of yours. P, I'm pulling up pictures. Adriana, I've got 2 of yours. So if it's the same ones, then you don't have to repost them again. I got them. Alright, so Adriana, and then Kevin, I got yours. So Adriana, big dog goes second. Alright, so here is... the market flow chart at all? Yeah, I got yours up here. Wait, I got them. Hang tight. I'll get them. So, Adriana, question. I can see that you put the market flow overlay chart on here, but do you use the other chart by itself? You know, I did this overlay and I thought it was a really neat trick, but I found that I lose a lot by not watching the chart. And specifically, look, remember the rule that I told you that I follow, where I have the white paint bar below the 8-3 triggers? I traditionally am not taking that trend trade long until we close back above the triggers, and then I might take it. So look, you've got the same thing here, technically. You've got the white paint bar down, and you're below your small triggers, and there's no chance of you getting back above them. So you kind of, you jumped in at a really good spot where it should have held, but it just didn't. But if I went back to this time, and I looked at the market flow chart, I'd have a white paint bar down and I'd be below those triggers, and there was no way I was getting back above them. So that's the savior for you for not jumping in at the spot. It's the right on the NASDAQ, you can't do it. On the S&P and crude oil, you can get in at the spot. So you just can't do it on the NASDAQ. They just run you the freaking frack over too much, my opinion. So if you're not above your small triggers, or they're not still crossed up, you got the white paint bar down, you're just gonna get run over. That's my thought. You cool with that? Yeah, I know you don't like it, but alright, let's take a look at the next one. Long trade from the mid-band, and again, this is crude oil, totally different beast. Everything was up, buying the support, getting out at resistance is perfect. I'm not sure whose this is. Is this right on that? Anyway, I don't know if it's Adrian or not. Whoever this is, doesn't really matter. Pete, this one's yours. So look. Perfect mid-band long up to resistance, perfect mid-band short down to support. I mean, you can't do any better. If I was going to make a textbook picture, that would be the one. So, nice job there. Adriana, I think this one's yours. And look. This is the exact same scenario where, again, you're getting in on the way up, and it's the NASDAQ, and you're way above your small triggers, and you're kind of 50-50 over here. Remember how we had talked about large triggers are above the 1-to-1s, and the small triggers are below the 1-to-1s? It's probably going to bounce, but then divergence kills it. So I think your stop is a little too high. Because anytime you have a 50-50, divergence just destroys it. It's over. But, I mean, it's a good trade. It's the right look. Everything. It's just, with the NASDAQ, it's just a tougher market to buy or sell at the spot. For me, if I'm going to buy or sell at the spot, one of the areas that I like, I give my brother the heebie-jeebies with this. But I love, and you guys, if anybody's figured this out, the edge of synthetic triggers is a great entry spot if you are against. So again, when I say momentum, I'm talking about price bars above the small triggers going up. Usually it goes a little further and it gets a little closer to the edge, but I mean, just once you have a second divergence, you just shouldn't lose money. It's all possible. Might lose a few ticks, but I don't think there's anything wrong with it. think if you did it 1,000 times, you'd win 700 of them and you'd lose 300 of them. You just don't know which it's going to be. Alright. What's up? Alright, so this is NASDAQ, and I mean, that's pretty much the mother lode on the 34.5 chart of all things being equal. I mean, you have mid-band, one-to-ones, all triggers screaming. I mean, pretty much 100%, 1,000%, there's nothing else you can think other than going short. And you sold on the way up into it, and you took your money on the way down. This on playback, which is awesome. And it just so happens that also the market flow agreed with it really nicely too. So I think that's awesome, perfect. Do that 1,000 times and you'll be rich. Did you guys know that work is a 4-letter word? So when you say I gotta go to work, all I hear is customers. Alright. Whose picture is this? I'm so sorry. Handyman, is it yours? That job isn't very well. Alright, whoever's picture this is, I don't know. So you guys help me out. I love the trade. I just had to digest it for a second. The reason I really love the trade is we had multiple divergences at the bottom. We had basically a pivot stop out the fib at the bottom. The downside of this trade is you're doing it into a lot of reasons why it can still go down, which makes it a lot harder. But I don't disagree with the trade. Whoever's picture this is, it's pretty freaking close to perfect as far as what we do with the white paint bars from the edges. My suggestion is buy a second monitor so you can spread stuff out a little bit. You know, if you're only looking at this many bars, you kind of lose perspective on where the prior highs and lows were, and whether you're coming from the tops or bottoms, or so. If you don't have 2 monitors, at least get 2 or 3. You will become a better. Hey, and by the way, can I also say something else? Get 32-inch monitors. You'll be a lot happier. Alright, this is the trade I did this morning. Whose is this? I went way back to figure this out, but whoever posted this one this morning, this is the same trade I did this morning. I was like, hey, I recognize that. That's exactly how I got in on the 1 bar up, and just awesome. Perfect trade. Everything's going down, everything's going down, everything's going down. Sell the crap out of it and hang on for the blue line. Welcome to Nexgen. And then there's one more picture that I got, and if you guys have more pictures, post them in, I'm gonna get them. Everything on God's green earth is screaming to the downside. Sold exactly at the area because it's the S&P, and you can do that on the S&P. Market flow helps. Everything helps. Took your first profit target. Probably made the second one, I would guess. One small, teeny tiny thing. If you make a second divergence, you can probably have your stop down 1 or 2 more ticks. Because if it makes a second higher divergence from 1 to 1s, it'll probably go a lot higher. So probably could move that stop down a couple of ticks, but other than that, perfect. Alright, Zorro, take a peek. Aha, now we're talking. Now we're talking. Okay, starting with the big chart. Everything is up. 100%. This is your first long trade at 66.50. And then everything breaks resistance and you get the perfect second trade. Pull back into your areas. Quick first target at the divergence, second at the fib, which is perfect. And then you do a little momentum trade through the 1 to 1 and take a quicker profit on it, but you can't go wrong. Perfectly done. Zorro. Maybe didn't quite hold on to that second one long enough, but other than that, how far did it go? Did it go all the way up to 69? At least 54, probably 69. I'm just guessing. It went, yeah. Look, if momentum still has momentum, don't get out. Take 100 or 200 on your first one, but don't get out because sometimes those momentums never stop. You don't even get a down bar. They just go all the way, and man, it's so much more fun making a lot of money than a little money. You just have to know when you can get away with it, and when it's screaming on every chart, that's the time where you hang on for dear life and try to get more. Okay. Alright. Trend trade long, yay or nay? I mean, it's already happened.
Order
Get in late.
filled.
Look, the only thing that's going to take us out is the second lower divergence. So, if we don't get a second lower divergence, then we're not getting out. So, and I'd probably give it even a few extra ticks just for the hell of it. 'Cause, second lower divergence. It's just too damn strong on the big chart to think that you can let a second divergence.
Target filled.
I should have had a first target right there. Okay. Anyway, hit a little smaller first target. I'm going to make him come get me on the second one.
Stop filled.
Notice what we have, guys. Third divergence. It's just a horrible, horrible termination condition. It happens all the time. Third divergence, party's over. You're like, God bless it. I thought I was going to get rich. Now, don't give up. If we put in divergence from 1 to 1s down here, we're going to go finish the move. So, fear not. We're still probably going up to resistance. So what we want to see is a good reason. Like, do you see how the trigger's rolled over
Order
here?
submitted.
Let's see if we can get some. Oh man, it hit me. It hit me. Gee, that is rude. That's how. Well, that was it. Maybe they'll be nice and give you a second chance.
Order filled. Stop filled.
Okay. I can do that one twice. Anyway, well, that's momentum that lost momentum, and I changed their mind really quickly, didn't they? This is the thing about the NASDAQ, guys. Anybody who is familiar with the NASDAQ, you're going to get 6 or 7 trades in a row that it's like you just can't freaking miss. And it's just money, 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 money. And you're like, oh my God, I'm just getting rich. And then all of a sudden, you're going to have trades that look like they should work perfectly. And they just don't work. And if you get 2 or 3 of those in a row, you have to start saying to yourself, hey, wait a minute, something's amok. Take a little 5-10 minute time out. And then, look, maybe we'll get a second chance at this.
Order submitted.
Alright, let's see.
Order filled.
Alright, so I'll take a little second chance and we'll see if they're going to be nice to go up. Let's see if we can get a little trim trade long here and see if they're going to be nice about it or if they're just going to be... if I lost this one, I'd be like, screw it, I'm not trading anymore for a while. I'd take a break. Just because it's supposed to go. It's supposed to go up to the fib at least. And if it doesn't go, then usually it's a good sign that they're up to something. Huh.
Target filled.
Alright, half, and then I'm going to get a little stingy with the second half. Looks like I don't have to.
Target
There we
filled.
go. Double bingo. So, anyway, look. So I lost one over here. This is where they were supposed to go. You want to know the really cool thing about the market? It has a memory. So look, this is where they were supposed to go. Right? Can we all agree to that? That's the look. And they totally, look, we took a loser. Shit happens. But the next winner, look, it's from the same damn spot. Literally, same spot. So we take a small loser and then we take a big winner. That's it. That's all you got to do, guys. So sometimes you get that second chance at the same, it's the same apple. The apple was 23, 24. And then you get the second bite at it. The second bite worked out a lot better. Elvis, lose that word from your vocabulary. There's no we in trading. Look, as a trader, you have to figure out what trade suits your eye the best. And how are you going to know? Unless you try all the trades, how are you going to know? Right? I mean, unless you actually try momentum trades, and then you try high volume trades, and you try trim trades, and then, ultimately you have to figure out which ones you're good at, which ones you suck at. Or which ones do you lose more than you win, and which ones do you win more than you lose, because it's about winning. It's not about what type of trade you're taking. Alright. Looks like we're going to get one more long trade here. I guess.
Order filled.
You guys want to do one more? As long as you don't make a second divergence, I'll stay in this thing. Now because we... Oh shit. That's my target. Alright. So, I'll take one
Order
off since I'm
canceled.
over $200, and then too close to losing money here.
Target filled.
Alright, bingo again. What do you guys think? We break through, we pull back, we go to the next fib and make some money. Everybody cool with that? I mean, that's not a very difficult one, huh? So we've done 3 trades in here where, again, look, loser, big winner, wait for it to break out, big winner again, and then now we're in timeout zone. I don't need the chart to tell me that, but let's take a look Anytime I get divergence from yellow 1-to-1s, screw that, man. I'm not touching that damn thing. That's usually a top. So the chances of going back down some are really good. And we're going to at least go back down to here. Can we agree to that? I mean, even to prove it, you could just put
Order
it
submitted.
somewhere up there, and you'd probably end up making money. Let's just see. I'm pushing my luck a little bit.
Order filled.
All right, let's just see if we can get down to here and we'll make a little money.
Target filled.
There you go. Anyway, that's how much I believe in this. Look, it was white paint bar down, Elvis. Probably could have held off a little more, but that was what you wanted to see, right, Elvis? Oops. Let me take a picture. Jeez, man, this is starting to be off of my screen. I feel like maybe I didn't hang on to that long enough. I was just proving a point that we were done and you can start going short, but this is where we had white paint bar down, 1 bar up, and then I took the quick money, but obviously there was a little more meat on that bone. Usually I take half and then pull my stop down and let the other one marinate. I've lost focus trying to teach trade and everything else, so I need to slow my roll. But I mean, I was down like $300 or $400 for what we were doing in here, guys. This missed the trend trade. I mean, we were down like $400. Now we're up like $830. So remember yesterday we were just horsing around with the 2-lot. We made a quick $1,000. And I'd love to make 1,000 today. Here, let's do it.
Order filled.
Short, and it has to go now. And then we'll put our target down here. And if I get a second higher divergence, I'll get out.
Stop filled.
Second higher divergence. Now, I hate getting out, but watch what's going to happen. We're going to end up going so much higher that I would have just lost a lot more money, and that's the reason why we don't. Sometimes you got to do it again. There was the target. Now, how many triggers do we have past the target? Not a lot yet, which means it may hold. We'll see. We're not going long or anything crazy like that. Like that's a break. So we can go short again. Right? And you know the number we're going short to is 18. I think we've already used it like 5 times today. Everything is broken. For me, divergence from 1-to-1, then I missed it by a tick, but man, it's one of my tougher ones that I don't normally do another short trade because I end up losing most of the time. I would expect by looking at the large chart that we get resistance to hold. So, again, if we get resistance to hold, it's probably going to push it down the rest of the way. For me, I'm not a big fan of going short unless I'm below my triggers. So, watch. I'm going to right click on the chart and I'm going to put
Order
sell
submitted.
stop 2. See the reverse of our marker, how it's below my small triggers? If it goes down there and closes below, I'll try to get the rest of this. If it doesn't ever close below my triggers and keeps going up, then the party's over like I thought.
Order canceled.
You like it better when I throw... You have the charts, right, Elvis? You have software? You don't need my charts to see a market flow chart. You can see yours. Here's the problem. I don't like crowding 3 charts on the screen. because I don't get the big picture feel of where we started from and where we're going. So that's the reason why I personally don't care for 3 charts on one screen, and I advocate for multiple monitors. Fair enough here. I mean, we'll see if we can get some other trades. I'm trying to make shit happen here for you guys just for fun. I'm on sim because I've already hit my goal for the day on the other one, so. Let me see if there's not a lot to do at the moment because got your resistance, but all the triggers are going up, so you can't do squat about it. I was about to go long right here. This is where I was anticipating we were going to start going up from. There's not a lot of room. It's fine. There's not a lot of room. It's not easy. Should still go up one more push, but I wouldn't do it into resistance, of course. Just wait it out here for a second. Anybody have any questions, comments, concerns, things you guys want to go through? Have you had a fun day? Alright. Cindy, freaking textbook perfect again. Short at the one-to-ones and everything going down, make your money. Should I close once divergence appears from a one-to-one? Hell yeah. I think so. That's just my thought process on it. Now look, we're still going higher, guys. There's nothing that says we're not going up higher still. Even,
Order filled.
you know, being at some resistance here, still gonna go higher. Can you see it? I mean, I'm not trying to go for a lot because there's just so much crap up there in the way. But you don't have to risk a lot. 3 points. 2 ticks below there. If it doesn't go from here, it's not going.
Target filled.
There you go. There's another one for you. Again, that was a pretty easy one, right? We had momentum look on this chart, up on this chart. We had high volume area on this chart, up to the fibs. I mean, it's only 7 or 8 points, but if you do 7 or 8 points a few times a day, you're rich. It was just obvious, up to me anyway. And look, if it's not obvious to you, it just means you need more practice. That's okay. So notice we have a white paint bar now after divergence from resistance. The reason I wouldn't do white paint bar shorts, Elvis, give me the strength of these triggers, up or down. Are they strong up or not? So, no going short against strong triggers. I have a picture for that. You guys have seen it before, right? And this is a joke, but if you wish to commit financial suicide and give away all your money and hate the shit out of day trading, go short into strong triggers. Or the second way to blow out your account is trade into termination conditions. So what we're waiting for is weaker triggers, or it's probably going up still. You know, I know it's you can't think it's going down when the triggers are going up, right? Because with the strong up triggers, the support is more anticipated to hold than the resistance. Now, I wouldn't do it because sucks. It says don't do it. But there will come a time when 58 breaks here in a minute and we'll go long again. Or not. I don't know what's going to happen. I don't have to know. Everybody hates to lose, Elvis. in the beginning, and then once you realize that as long as you took the right trade, losing is okay. If you lose and you took the wrong trade, it really pisses you off. Right? So, look, I wrote this little thing a while back. I'll read it to you out loud. If you trade and practice the wrong rules on simulator, you're very brave and you win those trades because you don't care if you lose. How many simulator millionaires have you guys seen? 1 million? Because you don't care. You're just, hey, do a 10 lot, go long, hang on for dear life, it's okay, put a bigger stop. But you're not practicing strict, repeatable rules, and that's where people lose. Make this look better. Right? So if you practice the wrong trades, that's too Now, when you switch to real money or go to a prop account, you're going to have a false sense of security and you're going to actually care about losing money. And usually you lose 4 or 5 trades in a row that don't fit the rules. There's no law that is truer than Murphy's Law in day trading. If you're on simulator, you will win all the wrong trades. The minute you switch to live and do the wrong trades, you will lose 100%. Tell me if I'm wrong. So, you know, you get this negative psychological spiral going once you start losing and you're like, damn it, like that guy that cussed me out the other day. He thought he should be a super trader after 3.5 weeks. It's like, he's really pissed off, like, you know, and it's just, it's lack of understanding of what it really takes to be successful that makes people angry. Because if he knew that he had to learn all the skills and become good at something before he got paid for it, and if you say it's slow, it makes sense, right? You have to actually get good at something before somebody else will pay you for it. Whatever it is. So anyway, when you spend months lying to yourself, and those of you guys who have not written a trading plan, this is you. You're lying to yourself. And it doesn't matter how long you fuck around with this. It's going to be a year, 2 years, 6 months, 6 years. You're going to keep losing because you don't have something to fall back on. So we have the answer, guys. Learn the rules, post your trades, use your spreadsheet, document your losers, make sure you're following the rules, and you can win. If
Order filled.
should go down. If we lose momentum, I'm gonna get out.
Stop filled.
We lost momentum. Now, I was trying to do a momentum trade, but losing momentum, I had to get out. It's that darn divergence and white paint bar above the 8.3. It's such a good filter for me personally. But it doesn't mean that we won't still go down. It just means that we have to close below the triggers before we can finish going down, if that makes sense. And you can try and guess at where it might turn from. Like if you were going to go, hey, I'm going
Order
to guess at
submitted.
where it might turn from up here. You know, you can do that. But guessing at
Order
where it might
canceled.
turn from is usually detrimental to your health. Notice my rule has kept me out of this so far because we still haven't closed below the 8.3 triggers. Well, watch this.
Order filled.
That's the close below the 8.3 triggers. Now, we still have a lot of work to do because we're trading in high volume areas and stuff like that, but that was the close below, and as long as I get one up and I get another one down here, I'll be cool. guide time. Hit the stop out. Probably don't have to leave this that much. Guess I could take half of a fire low.
Target filled.
Half at a prior low, and then now I'll break even, and we'll see if we can get the rest of it. Everybody cool with this? And again, as long as I don't make 2 bars up, I'll stay in it. If I do, then I usually will get out.
Stop filled.
Alright, I am done for the day. Hang on a second. I know we didn't burn the barn down or anything today, but we were trading a 2 lot, and you remember yesterday we made $1,000 bucks? I just want to see where we're at today. $1,000 bucks again. So $500 a contract, just horsing around. And I damn sure didn't do any great trading. I mean, I did a couple trades here and there. It's $500 a contract without blinking and while teaching. So that's not so bad. And there was my second chance. Anyway, look, I'm done for the day. If you guys have any questions, if you guys want to sign up for that week-long seminar, 6 hours on Sunday, and then technically they're going to do the first one on Saturday the 12th, not Sunday the 13th. Anyway, so it's October 12th. If you want to do it, just talk to your salesperson. We'll get you the right information. We'll get you the place to go sign up and pay for it. So I know I'm a little premature in telling you guys, but I'm really excited about it. So I'm kind of saying a little early. But we'll get you taken care of, have no fear. If it's something of interest to you and you feel like there's a little missing piece, I think this may be it. So, yeah. Alright, you guys have a great afternoon. We will do this again tomorrow, guys. So, I appreciate you being here.